Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Bitcoin's price action after the Bybit hack and over the weekend was underwhelming. We saw a strong bounce from the lows of 95,000, reacting to the hack and the overall traditional market dump, where SPX also dropped heavily. The range climbed up to 96,500 before breaking down below the yellow horizontal at 96,000, testing the 95,000 to 95,500 area. At the time of this recording, the price is breaking back through the yellow horizontal at 96,000. Let's see what Monday brings. But I'm still very bullish, even in the short term, although bulls keep longing these lower levels, causing long liquidation leverage to stack up on the 3-day liquidation heat map around 94,700 and 94,800. Higher time frames on the heat map remain unchanged from yesterday's video. The weekend is always slow, with the least amount of volume and the lowest average gain or loss ratio on the flashback market stats indicator. But Monday has been the strongest day recently, averaging a gain of 2.02% and closing green 52.28% of the time. Side note, Thursday is the worst day, closing red 50.65% of the time, with an average loss of 1.51%. This could mean big players are buying on Monday and exiting the market on Thursday, but you never know. In other news, the US Marshals are unclear if they even have the private keys to control their seized digital assets, which include 196,000 Bitcoin, worth a total of $19 billion. Reports suggest these private keys were stored in spreadsheets. If they lost the keys, those coins would be gone for good, reducing the total supply. While that's unfortunate, it could make the remaining Bitcoin even more valuable. Since the Friday incident, we've witnessed a notable decline in global open interest across all coins, dropping from $65.8 billion to $58.9 billion. This shift signals a possible decrease in market participation, as traders have pulled back or closed positions in response to the event. The drop in open interest might indicate increased caution within the market, with traders hesitant to commit to large positions until the broader market sentiment stabilizes. It also suggests that liquidity could tighten in the short term, potentially contributing to more volatile price action as fewer contracts are on the table. This could be a sign of caution, but it also sets the stage for more pronounced moves if the right catalysts trigger a rebound or further contraction. I'll keep you updated daily. Join the free Discord for real-time thoughts, entries, and exits. Like the video if you got value out of it, and hit subscribe plus the bell if you want to stay updated. And see you in the next one.